Yo, what's going on, guys? It is your boy Bliss. Today is February 15th, 2021. It's been a super interesting day. First and foremost, let's start off with pretty much the consistency and the difference in the approach of actually trading strictly by the rules of a journal, which you formulate yourself, in which you follow and you read and you record daily everything exactly what it is that you need, and you have a set of rules which you can reference to at any point of time as well, to always refresh your mind that you shouldn't really be guiding too much away or being too far away from what your rules are. Now, I definitely want to go over a little bit of how this trade is actually currently playing out for NZD CAD. It's been extremely interesting. One big aspect about this trade, which I am trying to develop slowly over time, is knowing how to basically take a trade in which I know I can hold on to basically more than a day or even two. I think this is probably going to be the longest trade. And it's really about me trusting my strategy. So my current strategy at the moment, the implication of exits of the market are all based off of the same time frame in which I overall dictate my my direction, and that's H1. There is pros and there is cons to that, and I think that because of this particular trade, and the way it's coming off of the higher time frame, I'm pretty confident about it. Let me just kind of blow this up a little bit. So as you can see, really, market overall is coming from a downtrend, right? We were stuck in this high region over here. We finally broke below this level of support right here, this box range, this entirety of this area right here. Finally out of all of this range, and now we're trading below it. So we have all of this wave room right here in which market can touch. However, market did respect this point and it found a level of support, but it broke below it. But it mostly is respecting this level because of this, I believe. There is a strong price point where here it acted as resistance, and now it is really acting as support. Like it did act very slightly over here in a nutshell. When market came back down, it slided itself pretty hard. So we have to be on the lookout for that. But also keeping in mind that we're still under our sell zone. So really, of course, that doesn't mean, that's the thing. Could have I spotted this and taken the 30 pips back to the upside on our lower time frame? Yeah, I could have. I'll say that I could have not, right? There's a clear entry right here, right? Market came back down. It basically failed to continue to make new lows. It came back up, found a small level of support. A pretty good entry would have been right here. Wouldn't have been able to get over here because you would have to have a market develop. And we know that we're still currently in that sell zone. And as you can see, my market right now is basically very close to the same point as where we were yesterday. It is a little bit earlier though. Market is again flailing around this trend line. And again, this trend line is an H4 trend line, so it does have some power to it. As you can see, market did hit it again and respected it quite well. I did take this entry right here with a 20 pip stop. I'm still confident that if market still decides to go ahead and pull itself back up, we still have enough wiggle room. I really believe that this is a 100% retrace. The reason I say that is because judging off of the H1, this entire section right here is an area of consolidation. And notice where my wick is here, and notice where my wick is here. So this is really not a point in structure overall for the market. So even though it failed, but we still got a lower low below all of these lows, and we did get candle closure. So I still firmly believe that now at this point, it's pretty much What I should have done, really, this trade in itself, this entry should have been here. Why? Because over here, unfortunately, this is a very this is an example of a discretionary trade. I was kind of like, yo, I saw this wick, but I wasn't really in looking for anything else. I just saw kind of like this point lined up, but it's too far away and it's not really in line with what the current market is doing. I think that's also important to realize that a lot of times, like, you have to kind of follow what is really market kind of following overall. Like, what's the overall pattern? There's this trend that keeps continuing to go on, and every time it's hitting it, that's kind of a good position to take versus taking it here, which is like midair. Doesn't mean that I'm still looking for sells, so on and so forth, and that my higher time frame is not bearish. Higher time frame is bearish, clear as day. We are due now, though, after this level of support, is to form our next point of structure, which is technically be our point C, right here, right? And we are leaving a wick right now behind, which is good news. And look where it's coming into. It's coming into this zone right here, right at the 61.8, right? And NZD CAD is a pair that can move, but it can also take its time. On top of that, the previous daily candle was a bearish candle, bearish close, meaning the candle closed here. This candle opened here. And notice how this daily candle, who has 16 hours, has no wick to the bottom side yet. That's the other thing. The market has no wick to the downside. And if anything, I expect an area of struggle right around this range here before we can tap into this range. Doesn't mean that the weekly can't roll itself over. It doesn't mean that at all. It doesn't mean that we're not coming from a potential double top on a daily, which can potentially lead to a meltdown. That's not what I'm saying. So it really is just a matter of understanding those small concepts. But clearly, for the entry that I took, even though market did leave a little wick on top of this candle, it's not really a significant wick. It's not like more than 50% of the body. Wicks that are really good or indicative should be more than a quarter, you know, in order for it to reflect a bigger strength in terms of the actual rejection. Kind of what's going on with this candle right now. It tapped into it. It is struggling. And notice where it is tapping into, right? So it's having that. But also, keeping in mind that for this trade, I could have closed down here at this entry, right? I could have basically capitalized on all of this right here, which is about a 40 pip stretch, right? Which is not bad. I did go over some turbulence in this particular section because of the margins and certain things, but I really didn't get that in my way. At some point, I did kind of like remove my stop just to make sure that, because the margins for these things at times can be 10 pips. So it's a little different than EJ, where it's usually anywhere between 7 and or like 1 pip or like 4 pips or 5 pips. You usually won't see that on the broker. So having that being said, you have to have kind of a different approach. So the approach that I'm having here is really more of a longer term kind of trade versus a lower term kind of trade, which is also giving me some insight on how to, in a nutshell, really be more patient, right? It's kind of like we have all those breaker structures on the lower time frame, but the question that I'm begging myself to answer is, did it break the structure on H1, or is it just a retracement? It's just a retracement. Well, my rule in my book is that if it breaks the break, if there is a break of structure on H1, then it's a different story, right? Then it's a different story. But and then it's the structural retracement is still very much in line with H4 as well, as market is retracing right now. Even though this is a tested area, this low is lower than this low with candle closure and wicks. We also cleared this point right here. So we have to take all of those things into account. We can't just ignore them and also say like, yo, market is really not bearish. Just because it retraced a ton, it doesn't mean that the market is still not bearish. So I think it comes into a lot of that overall. And I mean, the fact that I'm still in profit, I've been in profit in this trade for quite a significant amount of time right now. Once this trade is actually closed, which is my first trade of my journal, um, it'll be interesting to see like how long I've actually been in this trade. And I think that this will be certain, definitely a different kind of level of development as well, because it's kind of like if you're able to hold on to this level criteria in terms of the trading, that also expands the ability to also focus on the smaller moves as well at the same time. So it's kind of like, because again, if you can understand it, then, and if you have rules and guidelines, then why would you not take it if you have the opportunity and you know what's going on? I think the moment that we don't know what's going on, that's the moment that things get scary. That's where the insecurity comes in. That's where we start asking ourselves, yo, if what I'm doing is really working. Like, is this the right way that I should be going about it? Like, is there something that I'm missing? And I feel like, interestingly enough, I am already seeing like a certain kind of impact by holding myself accountable to what I write over here. And like, trust me, for the longest time, I've been dodging this and kind of like making sloppy annotations and making sloppy trade journals. Like, things were never really complete. And it's like, yo, if you're gonna fucking take this shit serious enough like a fucking pro, then why are you not acting like one? So what do I gotta do? I have to document everything. It's part of my fucking role. It's part of what I want to do, and it's part of my journey, right? So definitely, and here's the thing. Maybe if for whatever reason this trade doesn't turn out to the outcome that I believe it will, maybe how can I say this? Maybe all I need to change is a little bit of my exit strategy, or maybe have come up with 2 exit strategies depending on how I want to go about it. Because it's kind of like, yo, if I just wanted to, easy, really easy. Actually, I'm gonna add it, and I think it's kind of like, if I want to wake up the next day and just take the profit, as soon as there's a breaker structure on the 30-minute time frame, just close the trade out. Because over here there is a breaker structure on the 30-minute time frame, right? There is one. There really is one. But that's not what I'm aiming for. I'm aiming for a longer projection. I'm aiming for this to hit pretty much a 70 pip run. I'm looking for a bigger target. So bigger targets will require more patience. You just will require more patience. They require a different kind of gut. And it goes like, I've never done this. So like, it's also giving me a different level of understanding where it's kind of like, I feel like as a trader, the stronger you know the intention and the stronger you know what kind of strategy you need to apply for that particular intention of the trade, that's how you really develop, a lot of edges of this skill. And again, it goes back to the sword. You can swing it like this. You can be the one guy that only hits the bat like that and you still make all the home runs. But you can be the guy that also can hit the bat any time of day, and it just goes like, yo, the more skill, the better. That's like telling play. Like, yo, if you're going to be number one, then you got to act like number one. You have to do everything on number one. You're number one. In order to be number one, you got to do X, Y, Z. You can't be like Louis that's doing, HJK. And I think it just comes down to that. And once you have that comprehension, you have that understanding, I definitely feel like it's a different point of view, It really is. It's just a different point of view. And yeah. You just got to go through it. I think that I realize in life, like, so many people, they don't do things because they don't want to go through it. It's kind of like, trust me, man, no one wants to go through a bankruptcy. I've done it. No one wants to go through some IRS bullshit. Signed myself up for it. No one wants to go to college. I did it. And it's just kind of like, and I still went to Europe. I still did a whole bunch of other things. And I'm still just getting started. Same thing with trading. You literally got to let yourself to be slaughtered with yourself. Everyone will have their own challenges, their own plateaus, their own difficulties. One of my biggest difficulties a lot of times is the patience. It's just sometimes I am a little bit too careful because I don't like the fact of losing. Getting to the point now where like I'm comfortable taking losses. Why? Because I really feel like I've known how to manage risk. Managing risk is super important for the longevity of trading. If you can't manage risk, you won't stay in the game. Part of it. Why? Because we all have winning streaks. We all have losing streaks. But again, it doesn't mean you can't control that. It's all about being able to manage it. One thing my brother said to me that kind of stuck not that long ago was like, yo, you gotta know how to manage certain areas and certain pillars of your life. And it's true. That's true. You gotta manage certain things, you know? You gotta understand that there's a doing part of it and then there's a taking care of it. The taking care of it is nothing more but a generalized term for it is just being managed. You take care of it. You take care of your money. You take care of your things. You take care of yourself. You take care of your car. You take care of your spending habits. You take care of all those things. All of those things are just nothing but management. Management of this, that, and the other. Same thing goes with trade management. This right here is trade management in itself. This is a different approach to trade management because of the different intention. The intention here again is to strike a longer stretch. It wasn't to wake up in the morning and close a profit out. That wasn't my intention. Therefore, all I need to do is just make sure that what I'm seeing is still following in line with that. The moment that it doesn't, I know when that moment is. If it appears, then I need to react to it. Right? Because, side example, if I take the trade with the intention of placing the trade and waking up at 5:30 at London and closing it, or closing it possibly in New York, depending on which pair that I trade, the fact is that my intention is different. Therefore, my reaction towards my intention must be different because it's going to be a different outcome. And in order for you to have different outcomes, you have to have different reactions for different events and circumstances. On top of that, different intentions. Therefore, the outcome of this trade wouldn't have been 40 pips. The outcome of the trade that I'm looking to secure is around 70 to 60 pips. Different outcome, different reaction, different intention. Different than going to bed, waking up at 5:30. I want to secure 30 pips that night. When I wake up, there's 30 pips. Different reaction, different outcome. Taking the trade for the buy. Different reaction, different outcome. Super, super important to understand as well. And that's where traders get stuck. You only have to do this way. I, for the longest time, thought, oh yeah, double tops is this. No. Double bottoms is this, that, the other. No. Fuck the pattern. Focus on what the market is doing. Understand what you need to do if it gives you enough confirmation. And understand what you need to do to get out. Because a lot of... That's the other thing. I don't know why people focus so much on understanding all of these styles of trading when they don't even talk about how to get in and get out of the market. Or they only talk about one or the other. It's kind of like, you gotta have the strategy, man. You gotta have a plan. And not just that. Is this a flip account? Is this your main account? What are you doing? What's the intention of the money? It's kind of like last night. And man, last night I was so tempted to fucking go ahead and just blast the chart because I had such a tight stop. And such a tight stop had such a good entry. I just want to blast that thing. Absolutely murder it. But then it goes like, yo, this is my main account. One of my rules is can't stack on a main account. Why? Because my life depends on this account. That's why. Can I do that on a $500 account that I put off to the side with the intention to flip? Gotta keep it blissful, man. You can't just be all sloppy doppy in terms of your intentions in the market. Have the intention, have the approach, have the conviction to take that approach. Know how to take that approach inside and out. Recite it every day. Do what you need to do every day. The moment that you don't do it and you just say that you're gonna do it and you do it one time, trust me, you're just gonna keep spiraling. You're gonna learn. You're not gonna learn as fast. That's what I can say. You're not gonna learn as fast because it requires discipline. It requires an enormous amount of discipline. It requires self-accountability into doing this because no one is gonna tell you to do this. You must do it yourself. And if you can't do it yourself, man, I really don't know what the fuck is going on. Like, I really don't. I really don't. So, anyways, guys, it's your boy Bliss. Dropping this one on YouTube because this one definitely got some fucking golden nuggets. Gonna love to see the reactions later down the line. Catch you guys on the next one. Peace.